Stock market news live. Stocks slump as coronavirus death toll rises. Dow tumbles as the coronavirus outbreak worsens. Global stocks fall as dangerous coronavirus spreads. U.S. stocks followed European markets down amid concern that the coronavirus could hurt the global economy. U.S. stocks, the S&P 500 has worst day since October as virus fears mount. Here's another one. Fears over the spreading coronavirus have set into markets. Global stocks as well as U.S. futures are tumbling on Monday as the death toll from the virus, which causes respiratory illness, rises and the number of confirmed cases keeps growing. The World Health Organization's decision not to declare the virus a public health emergency calmed investors momentarily last week, but concerns have quickly returned. Do you see a trend in the words used in these headlines? Stocks fall, stocks slump, Dow tumbles, fears mount. I don't know if you're like me, but when I see a headline with words like that, I'm tempted to click on it and read it to see what it's about. Not only do you have headlines, you also have social media reactions. Let's read a couple here.
The coronavirus alone probably isn't going to cause too much of a long-term market movement. However, if it spreads far enough and causes shutdowns of major airports, etc., then the economic impact could be significant.
Yeah, I highly doubt it's the virus causing the market slump. It's being propped up with debt. It's due for a correction.
This is normal market activity. Happens very regularly. Super great. China market opportunity for those who missed the last two.
Panic is a great thing if you held 25% cash for buying bonanza as the sheep panic.
Hey guys, buy the dip in a couple of days. The coronavirus is not going to be the next plague, just like mad cow disease, bird flu, SARS, etc. We're supposed to be. This is media fear mongering at its finest. When there's new news to report on, the virus will be forgotten about, just like the Amazon wildfires.
You never know what might set off major stock market corrections. This might be it. If I knew, I would sell, but I don't. So I'll hold.
All right, enough fun. Let me break down my thoughts. First, is a contagious disease that spreads by sneezing next to someone a cause for concern? Yes, absolutely. Did many stocks tumble yesterday because of fears based on the virus headlines I showed in the beginning of this episode? That's a reasonable conclusion. Let's use logic when it comes to a spreading virus. Where did the outbreak originate? China. Okay. Is the virus spreading? Yes, a couple cases in the US so far. Let's now think about that. What happens when people know there's a possibility you could get sick when you're out and about? I know for me, I prefer to stay indoors and away from people, or at least try my best to limit contact with people until everything settles down and there are facts to back it up, confirming everything is under control. I hate getting sick. Health is always my number one priority. Does this affect many Chinese business models? Yes. China's economy is the main economy that will be affected. So which industries will take the biggest hit? Well, let's think about it. Travel, right? Hotels, cruise lines, retail stores, casinos, transportation like airports, theme parks. I know Disney just shut down their Shanghai Park. And what about movie theaters? All of these industries will be affected if this outbreak continues. If you're an investor, a good question to think about is how will this affect the company you're invested in? Is the business I'm invested in solely reliable on the Chinese economy and the industries I just mentioned? Or is that just one category to the business? You know from previous episodes, I'm a part owner in Fiverr. I currently own 8 shares. Is Fiverr a company that will be greatly affected by a virus outbreak in China? Nope. It's a global company and everything is online. More people staying indoors, not working their day jobs in China, the better for Fiverr. Maybe more people will look into working on a side hustle on Fiverr during their downtime since everything may be closed. These are just my thoughts, and this is why I like Fiverr's business model long term. I've been building a position, and I hope I could buy shares at a cheaper discount. That brings me to my next discussion. Is that outbreak short-lived? I personally think so. As I mentioned, I'll be looking to buy stocks at a discount. The public typically tends to overreact to health threats. Whenever there's a new virus outbreak, people are influenced by the media, and as you could tell from some of the online comments we reviewed earlier, rumors could spread unchecked. Unfortunately, as I record this video today, it looks like the market is already recovering from yesterday's sell-off. Luckily, there will be more buying opportunities in the future. To wrap up, I'd like to talk about two of the biggest investing mistakes, especially for beginners. Remember, we're still at the beginner level for those of you tuning in. Portfolio is only at 700 and change. Check back in when I hit your number. I'll see you in the future. Back to the biggest mistakes for investors when it comes to human errors. Number one, as humans, we tend to focus on short term. We want instant gratification. And number two, we act on greed or fear. This virus outbreak headline is a perfect example. For the last 10 years of my investing career, I found that in many ways, the stock market is a system that takes money from the excited and the fearful and gives it to the patient and disciplined. The best investors are able to overcome fear, uncertainty, and discomfort. I like reviewing the sentiment survey on your screen on a weekly basis. It gives a great idea of where we're at in the market. You could consider bullish as being greedy and bearish as being fearful. Warren Buffett has a saying about the stock market and investing in general: be fearful when others are greedy and greedy when others are fearful. Time and again, the value investor has used this philosophy to pounce on opportunities. I'll end it there. Make sure to read the disclaimer on the screen. I'm not a financial advisor. This video is for entertainment purposes only. See you in the next episode. Peace. I'm not exactly sure if you guys enjoyed the first couple of comments with my voice impersonations, but just came across another Reddit topic that's trending right now, and the title is "People Aren't Fully Realizing the Economic Impact of the Chinese Coronavirus." So let me read it to you guys, and then what I'd love to do is read your comments below, and let's see if we get a conversation going in the comment section. That would be fantastic. So,
Disclaimer: this isn't a fear-mongering post about the virus itself. To put it into perspective, the swine flu epidemic of 2009 has over 110,000 confirmed cases and close to 4,000 deaths in the US alone, yet many people don't even remember that. But that's for a different discussion in a different sub. I'm currently in Shanghai now. From my observation, people in the West are not spending enough time talking about how devastating this virus has been to the Chinese economy and its certain global ramifications. Let's take the city of Shanghai, for example. It's not one of the most heavily impacted cities. It's not quarantined and people can mostly come and go freely. Many businesses are still open, from restaurants to malls. However, for the first time ever, I saw an Apple store with more employees than customers, and an open Starbucks with absolutely zero customers inside. The streets on a Saturday afternoon were about as empty as it would be at midnight on a regular weekday. All of this is happening during what's supposed to be the busiest week for consumer spending in China. The worst part is this doesn't seem like it will change anytime soon. Shanghai just announced that they will extend the Chinese New Year holiday by another week, and people will likely remain fearful for the coming weeks, if not months, if we don't see a dramatic turnaround of the virus situation. What this means is that any Western company that relies significantly on China for revenue would see their first quarter earning absolutely crushed, especially considering their forecasts were done with the assumption of this quarter being the best quarter of the year. For example, I'm foreseeing Apple miss their Greater China's revenue by as much as 50% this quarter, and it would be even worse for companies like GM, Ford, and the airlines. I'm not sure if it's widely known, but China is GM's largest market by revenue and Ford's second largest. And it goes on. Furthermore, this will impact the global manufacturing and supply chain significantly. I don't know enough to model out a detailed scenario, but my gut feeling tells me a prolonged manufacturing shutdown across major Chinese cities would be more than a little disruptive in that regard. I'm discounting the impact of the virus if it were spread to other countries in any significant numbers, but even considering the situation in China alone, it's extremely worrying. One final point is due to the significantly reduced traveling, China's energy demand for this quarter would also be drastically reduced. It will likely impact global energy/oil prices and cause even further ripple effects.
What you'll notice is there's actually 2 edits. So the original writer of this subreddit, he actually got so many comments, right, that he had to clarify on a few things that he mentioned in what I just read to you guys. So the first edit was,
For people that are telling me how the Chinese New Year in Shanghai should make the city a ghost town, yes, a few million migrant workers leave town during this time, but there are still 10 million local residents left. For them, this is a week of shopping, visiting friends, taking their kids to places since it's also winter break. I grew up in the city, and no, people don't just spend a whole week of national holidays at home. But yes, some businesses would be closed until, and then he used some Chinese language, and it may impact local expats' favorite bars and clubs. It may impact local, expats' favorite bars. You tell me what that means. But edit 2, some people are missing the point. No, I'm not saying the 2% drop we had so far is the dip. That's just normal fluctuation. No, I'm not saying you should sell everything, because unless the world is ending, in which case you wouldn't worry about stocks, your stocks, the market will bounce back. Hell, it bounces back after 2008 stronger than ever. But at this point, nobody knows just exactly how bad the damage would be and how long it would last. So it'll be rocky in the short to medium term. No, you don't have to react, but you also shouldn't be surprised if the market does.
so we'll end it there. I'd be interested to see what your comments are based on this little Reddit. It's actually trending right now. I don't know if you review Reddit forums and Reddit subreddits. I don't know what they're called, but I'm always interested, and I always read other people's opinions, and especially when I'm investing, I like to see what other people are thinking, bears, bulls. But that's I'm going to end it there, and take care.